Refinancing your private loans can be a really great way to get the ball rolling in terms of repayment of your student loans. But there are actually a few things to consider before deciding to or deciding not to refinance your student loans. So in today's video, I'm going to be sharing with you reasons to and not to refinance your student loan, as well as some tips to help you save both some time and money when considering refinancing your student loans. And lastly, my reasons for why I didn't. Hey friends, welcome back to the channel. My name is Shanita if you're new here. I am a public educator based here in Houston, Texas. And on this channel, we explore the strategies, tools, and tips to help you amp up your side hustle game, as well as be more productive and help pay off that student loan debt faster. So if any of these topics interest you, consider subscribing. So before we start, consolidation is related to, but slightly different from refinancing. It's meant for you to get a new rate, preferably a lower rate, on your existing private or federal loans. Whereas consolidation just means that you're combining together all of your existing loans. And in some cases, if you have a mix of high interest rate and low interest rate student loans and you choose to combine them, it could benefit you by getting an overall lower interest rate. So let's talk about reasons why you should consider refinancing your student loans. The first one would be getting a better interest rate. If you get a better interest rate, that would mean that the more money you put down towards your student loan repayment, the more of that money will go towards your principal balance instead of the interest. In some cases, the interest rate is a huge factor for people. Either the interest rate is way too high and they can't really manage it or stay on top of the payment because the interest rate is capitalizing over the principal balance. Most of it is being carried over into the interest instead of the principal. The other factor is a variable interest rate, where the interest rate fluctuates over a period of time depending on the market, which means that your monthly payment can fluctuate as well from month to month. So if you're trying to manage a consistent budget every single month, it kind of makes it hard to do if you don't know exactly how much your monthly payment will be month to month. So if you refinance, it can make it easier for you to make extra payments on your loans, which would in turn get you out of your student loan debt faster. In addition to this, refinancing can help you get a longer term on your student loan payment, which would in turn lower your monthly bill towards your student loan. But the offset to that would mean that it would just extend the length of the loan. So as a result of you getting a lower monthly payment, it would extend the length of your loan payment term. The next reason is a very good one, which would be that you have too many different lenders. And so managing several different smaller student loans can sometimes be a bit overwhelming. And with too many lenders, that also means that you could have different interest rates for each type of student loan you have. It may be easier to see everything all in one place and possibly refinance or consolidate your loans under one lender. Unlike home mortgages, there isn't a fee to refinance your student loans. So that is an added benefit as to why you might want to consider refinancing your student loans. And in some cases, a reason for refinancing may be as simply as transitioning to a lender who has a better customer service rating. And that can save you both time and stress. Freedom of choice. Unlike when you were first issued your student loan, you had no choice in terms of who your lenders would be. But now that you may be in a position where you are now ready to pay your student loans, you now have the option to shop around and see what lenders offer you the best repayment options for your budget. When you refinance with a company that offers you the option of a low interest rate with a loan term that also meets your financial needs, you now have the freedom of choice to choose who you'll be working with over the life of your loan. And this will in turn have given you plenty of time to fully vet the consumer ratings of this particular lender by going through websites like the Customer Financial Protection Bureau, the Federal Trade Commission, the Better Business Bureau, and Trustpilot. And last but not least, a reason to possibly consider refinancing is to release your cosigner. If you were like me and didn't have any established credit once you graduated from high school, but you needed student loans in order to finance your college education, your parents or legal guardians may need to co-sign on your student loans in order for you to get financing. In some cases, some parents have the option of taking out a Parent Plus loan to help you get through college. And then in other cases, they just were co-signers on your loan that was in your name. But the downside to this is that if you graduated in an economic downturn like I did during the Great Recession, this could possibly cause a lot of tension and stress between you and your parent or legal guardian or whomever signed off on your student loans as a co-signer for you. And in turn, if you're not able to make payments towards those student loans, it can negatively impact the ability for that co-signer to borrow additional funds in the future for things that they may need. So for that reason, you may want to consider refinancing in order to relieve that person from co-signing on your original student loan. So as a reminder, if you're getting value out of this video, please don't forget to give me a like by hitting the thumbs up button. As a new YouTube channel, this really does help me build credibility within the YouTube algorithm. So here's a few reasons why you may want to think twice before refinancing your student loans. So if you are thinking about refinancing your student loans because you want to extend your loan term, keep in mind that you may overall be paying more money in interest, and therefore it's not really saving you money in the long run. So if you refinance your loan from a 10-year loan term to a 20-year loan term, yes, it would give you lower monthly payment, but it would increase the overall cost of your debt, as interest would have more time to accrue and capitalize over time. Once you've elected to combine your student loans, like having federal and private loans combined together, you cannot undo them. You are able to refinance a second time around, but you won't be able to go back into your original federal loan servicing program. It's also really important to note that once you refinance your student loans, you will lose the federal protections of those student loans, such as income-driven repayment plan options, as well as student loan forgiveness options. And then lastly, you may find that refinancing may not even be an option for you, because you may not meet the eligibility required in order to refinance. In order to get an interest rate that's low enough to justify consolidation or refinance, the refinancing companies often require that you have a good or excellent credit score, typically above 660. So if you don't meet that requirement, you may be in a position where you end up having to find a co-signer for you to be able to refinance. Also, it's important to note that many of these companies check to see if you are a legal resident and holding an undergraduate or graduate degree. Why I chose not to refinance my student loan debt. I do not have a low debt to income ratio. So while my student loan debt is the only debt that I have, for more on that, see my previous video, my student loan debt far exceeds my annual income. So in my previous video, I had mentioned to you that I don't have any other forms of consumer debt, which means that I don't have any open lines of revolving credit. And that is really what you need in order to maintain a good or excellent credit score. Because I paid off all of my other debt before beginning this journey of paying off my student loan debt, my initial credit lines then went down to zero. And when you've made all your payments and they have gone down to zero, your line of credit closes, unless you decide to charge something else to that credit line to keep it open. I chose not to. I wanted to eliminate any other debt so that I could primarily focus on my student loan debt. That then brought down my credit score. If I chose to refinance my student loans, that would mean that I would need a co-signer. And the whole point of me paying off of this particular loan is that it already has a co-signer. So I don't need any more co-signers. I want to pay off this student loan debt to relieve the co-signer that I currently have on my student loan, because that student loan that I currently have that has a co-signer, that debt is also showing up on their credit report as well. Next is that I have federal loans, which offers amazing repayment rates and the option of student loan forgiveness, which I'm not willing to sacrifice in order to get a lower interest rate. And currently, due to the economic uncertainty, my federal loans have been put on an administrative forbearance, which has helped me buckle down and put more focus on my private loan. Next is the repayment period of time. The repayment period of time for any given refinance student loan, for me, exceeds the length of time that I intend on repaying my student loan. Most refinancing lenders tend to offer student loan refinancing terms of 5, 7, 10, 15, or even 20 years. So restructuring or refinancing my student loans at this point would essentially just be kicking the can down the road. My theory is the more uncomfortable I am with my current loan terms, the more likely I am to pay them off faster. And then last but not least is that I don't really think I need it. As I mentioned in my first video, my loans for the most part are already consolidated. into 2 manageable separate loans. I hope that these pros and cons do help you figure out and make a decision on whether you choose to refinance or not. Whichever one you decide is not good or bad, it's just based on what works best for you and your lifestyle. If you're new here and would like to find out what I've been up to here on this channel, be sure to watch these 2 recommended videos. Please don't forget to give them a thumbs up and be sure to hit that notification bell so that you can be informed on when I upload my next video. Until then, I'll see you on the next one.